A world powered by the blockchain is being formed right in front of our eyes. Experts are calling it the Internet 3.0, the next digital revolution. It's leaving many investors and even institutions looking for a path to take an early position in this massive opportunity. Bitcoin, Ethereum, Ripple, Dash, it's all speculation at this point. But what is certain is that the most profitable businesses for cryptocurrency and the blockchain is in the actual creation of these coins. This is why some of the top early adopters of Bitcoin, blockchain miners, fund managers, and even billionaires have come together to create a new vehicle to invest in the blockchain core itself. Get immediate access to this new company by going to crushthestreet.com/Bitcoin.
Hello everyone and welcome into crushthestreet.com. I think I got a very timely guest on the line with me today. We're going to be talking about precious metals and the current environment, the current optimism we're seeing in the economy, and just the headwinds that gold and silver are seeing at the moment. And we're going to discuss crypto a little bit and the implications of crypto. And to do that with me today, I got Gregor Gregersen of silverbullion.com.sg. And you know what? We've had him on before. He's a great resource. And if you're looking for bullion, if you're looking for peer-to-peer lending, which we'll talk about today, and they got some various other products as well, and we'll talk about those. Definitely check out silverbullion.com.sg. Gregor, thanks for coming on the line with me today.
Well, thank you for having me.
Well, what a time it is for precious metals, Gregor. We are having some of the most ardent bulls step away from gold and silver and wondering if they lost their luster in the 21st century world. And these are the questions people are asking today, and I want to get your thoughts on that.
Well, I don't really think so. I think that,
you don't
right
think,
now...
let me just clarify. You don't think that people are losing that faith, or you don't think that precious metals are losing their luster?
I think it's more of a temporary thing. The way I kind of see the world is that right now there's a risk-on sort of mentality. In other words, with President Trump lowering the corporate tax rate, equities have been doing very well. So just last month I was speaking to fund managers, about 40 of these, and these were people between $100 million and $1 billion worth of portfolios. And a lot of these people, they still are in equities, and for the last 1.5, 2 years they've been wanting to go into equities, and they're not really very interested in gold or silver. But the reason why I'm saying that long term I don't see it as that big of an issue for gold and silver is that there's going to be a reversal of the psychology. People at some point are going to become more fearful once the markets start turning and so on. And then you will see a natural tendency to go back towards gold and silver. What is different this time around, however, is that cryptocurrencies have come along. And a lot of buyers who would traditionally go and buy gold and silver are actually opting to go towards the cryptocurrency. So that's something new. And what we've been seeing in the industry is that there's definitely a big chunk of sales which has been going towards crypto instead of gold and silver. But having said that, the people who bought crypto, they made huge gains. So I would expect that at some point, some of these people will return back into gold and silver, take some of the profits, and even if these people just put 20% of what they earned into precious metals, we'll probably see a big uptake of physical bullion again.
Yeah, that's a very good point. Well, just to add to that and to explore it a little more, my question is gold still serving as a wealth storage vehicle in the 21st century? And is it still correlated to what we're seeing globally with all the money printing taking place? And I'll try to get this chart on the screen here when we post the interview, but it's just basically all the assets from major central bank. It's just these exponential charts of their balance sheets and their assets on their balance sheets just skyrocketing here, and at their peaks in end of 2017, 2018. You got the Fed, the PBOC, ECB, and gold just lackluster. Is this not a correlated? Are these not correlated anymore, or what's the dynamic here?
Well, I mean, you bring up an interesting point. What I found very interesting was that when President Trump basically said that he wants to destroy the North Korean people, we suddenly had a spike in cryptocurrency prices, and we didn't have as much of a spike in gold and silver, which traditionally you would have seen a spike in gold and silver because people would say, hey, maybe the risk of a nuclear war is higher, let's put a little bit of money in a safe haven. So we didn't see that much, and that was really something that sort of caught my eye. So the way I kind of see things, I think that as long as you're within the banking system, and as long as you're dealing with derivatives or IOUs within the banking system, we are going to have a crisis at some point, and people are going to go back into assets which do not have counterparty risk the way you would have if you have a derivative. And what's new, I think, now is that you have gold and silver, but you also have cryptocurrencies. And people would say, well, you also have real estate, but real estate is a bit different because it takes a while to sell it. It's not as liquid, and in many ways it's a function of financing. But you go back to gold and silver, and in some cases crypto, and you're looking at sort of that fallback, that security. And I think that has not changed. The only difference is that right now gold and silver, they have a competitor, which are cryptocurrencies. Having said that, I don't really see it as a competitor. I think it's a complementary type of product. And I feel that cryptocurrencies and gold and silver are actually stronger together than they were ever before. And I think right now, because cryptocurrencies are appreciating so much, people naturally tend to focus towards the cryptocurrencies. But once you start having some more stability in crypto, or even if they were to start falling somewhat, I would expect many of the crypto people to actually go back into gold and silver, because it's my understanding that a lot of people who bought a lot of crypto actually have their former gold and silver holders, or had a mentality which was sort of along those lines.
That's a really interesting point. And I think it's something that we've all been thinking, but it just kind of illuminated the way you just put it there. And that is the sound money people just got largely enriched, and the sound money environment got largely enriched by cryptocurrencies. So any shift from the money out of cryptocurrencies will likely flood, or is potentially going to flood, into gold and silver, which could be a lot of money, especially all the wealth that's been made in the cryptocurrency space. And now I'm sure you know this, Andy Hoffman, longtime proponent of gold and silver, is now saying silver has lost its role as money in the 21st century. Actually selling his silver for Bitcoin, and depending on when he did this, he might be up 5, 10, 100x on his money. Who knows? But do you think this environment in cryptocurrencies is a time to take profits, or are you pretty bullish on crypto yourself?
That's a difficult question. I mean, right now I think I'm somewhat bullish myself. I might want to preface this. We had one customer who had about $2.5 million worth of silver with us. He got a loan for 1.2 with our peer-to-peer system, and used it to buy Bitcoin when it was, around $500 or so. So now he's sitting on probably on a 40 plus million gain that he made on that. And I think, so many other people like him, which right now, Bitcoin just keeps on going up and up. So it just kind of makes sense, I guess, to hold on to it. But I'm pretty sure that at some point he's going to use some of those gains and go back to buy more gold and more silver. And I think it's just a matter of hedging your position, because if you go into an asset, cryptocurrencies, and it's going up 40, 50 times, I mean, at some point you have to worry that it might start coming down pretty quickly as well. So taking a bit of your profits and putting it back into something safe that still fulfills those requirements of being independent of the financial system, and therefore going back into gold and silver, it just makes sense. And it basically means you go back into a bit more safety. So
if you would, Gregor, touch on the value proposition of silver right now. I'm looking at it, $16.15 at the moment. And, some, even Andy Hoffman is now saying that silver has lost its monetary purpose to Bitcoin. I know he's a little more, altruistic in his view, and he's taken a firm stance in Bitcoin. But is there any truth to that, to the fact that silver might be not as monetary as it once was, considering all the competition out there?
In my mind, no, because in practical terms, we haven't been using silver as a method of exchange for, since 68 or so. So for the last 50 years, we haven't been using silver to exchange goods. So in that sense, the advent of Bitcoin didn't really change anything. And, if you were to make the point that silver is no longer relevant, then I think we can make the same point that gold is no longer relevant. So I wouldn't really buy into that argument. I think both gold and silver are remaining relevant as a way to store wealth for the long term, and as an alternative to basically putting it into crypto in this sense. As a matter of fact, I think they're complementary. So, but coming back to your question about silver versus gold, there's a traditional silver-gold ratio, and this silver-gold ratio tends to vary between 50 and 80, meaning when the ratio is low, it means that it takes 50 silver coins to buy one gold coin. When it's high, it takes 80 silver coins to buy one gold coin. So traditionally, over the last 50 years, if you were to buy silver when the ratio is high and sell it when it goes down, then you will be doing very well. Over the last, for 30 years, if you follow this 50-80 rule, you would have made 450% increase in the amount of bullion you have. That's on top of whatever, appreciations the gold or silver would have. So, and it makes a lot of sense. Basically, when silver is cheap versus gold, it makes sense to buy silver. When gold is cheap versus silver, it makes more sense to buy gold. Right now, silver is historically very low compared to gold. So if somebody were to ask me which way to go, I will definitely point the person to buy silver rather than gold.
Gregor, in that example you just gave, what's the practical, what would someone have done? They would have bought silver when it's high, but then when it's low, what do they do? Buy gold instead, or cash?
Yes.
What are they doing?
Yes, they will switch from silver into gold.
And they're are they selling the silver to buy gold, or are they just buying it buying gold at that time, in a steady increase, or a steady periodic purchasing, monthly purchase?
It partly depends on your preference, but in the example we have on our webpage, where you can actually experiment with different ratios and so on, it's a dynamic chart. You would basically sell all of your silver and buy gold when the ratio hits around 50. And then you will do the opposite when it reaches 80. And one of the advantages of this sort of system is that when silver ran up to $48, a while ago, and then came crashing back down, the system would basically have put you back into gold and preserve your capital. So it's sort of a common sense rule that once you kind of look at it, so there's not so much that can go wrong. And it's not really a technical thing where you would buy and sell, often. Over 30 years, you might just do 6 trades, for example. So maybe 1 trade every 5 years or 4 years. It's when you reach that ratio. It's almost like a common sense sort of thing, so to speak.
Sure. Yeah. You're really taking advantage of the extremes, and we're at one of those extremes currently, yes. Which is very, very interesting. Okay, so one of Trump's accomplishments, he's bragging about this. Unemployment is lowest in 16 years. Business and manufacturing enthusiasm is at the highest level in decades. And one of the things he promised is during the campaign was that for every 1 regulation he would they would have to repeal or remove 2 regulations would have to be cut. And as of now, for every 1 regulation, 22 have been cut. And I just say that to prompt you with this: is the Trump optimism and these numbers, manipulated or not, strong numbers in the market, going to be a constant headwind for gold and silver for the foreseeable future?
I don't know. I don't know is the easiest question to answer. I can tell you that equities are just very high, and we've been printing so much money. I mean, we've increased our base money by 450% in the last 9 years, and to some degree, people are putting some money into equities because they don't know where else to put it. I mean, if you put it into bonds, you get very, very low returns. In Europe, you get negative returns, so it doesn't make any sense to even put it in the bank. And so where do you put your money? And so by default, a lot of people put it into stocks, and it's kept on soaring and soaring. So are we going to keep on seeing that? At some point it's going to end. And, I expect there to be a reversal. When that is going to happen, I'm not sure. But I sort of feel that a lot of the prosperity that we're sort of looking at right now is more a function of money that we printed and sort of patting ourselves on the back as opposed to a real solid economic improvements that we're seeing.
One thing that I would remind people of is how quickly things can turn on a dime, and that is sentiment and feeling. And even with Bitcoin, as bullish as I am on it, if it goes to $9,000 in the next 2 days, which is very possible, who knows, things will change in the environment very quickly. We've seen that with stock market crashing and the sentiment changing, and the dot-com bubble, the 2008 financial crisis, real estate, just black swan events, and how quickly all of this feeling of optimism and prosperity and bull market and asset prices rising can change in really a second. It's not this slow-moving train that you can see from a long distance away. Things change quickly, and in the moment of chaos, people are likely to hold on, hoping for a reversal, and it kind of just catches people off guard. And I guess I would love for you to just kind of comment on that, and maybe how that would tie into gold, Gregor.
What you're saying is extremely true. I mean, I sort of liken it to people watching a movie. If you're seeing one person running out of the movie, people kind of look at him, well, that's a strange guy, he might be running to the toilet. But if 3 people start running out of the movie, people take notice. Now, if 6 people start running out of the movie, there's a chance that a 7th guy might join. He doesn't know why, but if 6 people run away, I better leave as well. Maybe there's a bomb, or who knows what's there. And if that 7th guy runs out, there's probably an 8, and a 9th, and a 10, and suddenly everybody runs out. So this is a very interesting subject, complexity theory and so on, where you can sort of see how stock markets, they sort of behave in a way that once you get a trend, a lot more people will join that trend, and then it sort of can quickly move from one status to another status. So I think what you're saying is very true. And what a statistic I like to look at is how much leverage there's in the system. So if you take the New York Stock Exchange and you look at how much margin purchases are happening on the New York Stock Exchange, I believe the number recently was 560 million US dollars, which was about 40% higher than what we had ahead of the crash of 2008 or 2007, around that time. So there's essentially a lot of leverage in the system. A lot of people are borrowing money to buy more stocks. And once you run out of people who can borrow money to buy more stocks, then things won't go up anymore. Then the chances of it starting to fall and fall quickly are much higher. So the more leverage you have, the higher the chance of things moving quickly in one direction or the other. And with leverage being that high, I think what you're saying is very, very true. For all we know, next month or the month after, we might suddenly be seeing a big crash. And if we see a big crash, the psychology can change very quickly. And once that happens, people will start going back into gold and silver. So right now, gold and silver might be out of fashion in a certain way, but for the long term, I think the characteristics that make physical gold and silver interesting, which is the fact that you're not dependent on a third party to be solvent, and you basically can minimize your counterparty risk. That's something that people will always want, and that's why I'm not really concerned about the long-term desirability of gold and silver, because if anything, with so much debt in the world, there's going to be more and more need for people to protect their assets.
Gregor, we talked about this last time we interviewed you, and that is the peer-to-peer lending that you guys are now offering. I think it's really interesting. People can use their gold as collateral to access cash if they want to access some cash. And I think it's a really interesting way to put your metal to work. Please expand on just how the success has been over the last couple of years. And if people want to learn more about it to actually do it with you, let them know how they could do that.
Yeah, essentially it started with a customer who said that he needed money, he needed cash, but he didn't want to sell his gold. Could we give him a credit or a loan? And the answer was no, because we didn't have a money lending license. But being in Singapore, I sort of studied what we could do and what we couldn't do. And it became quite apparent that we could run a peer-to-peer lending system whereby one customer will get a loan from another customer. And we are essentially the middleman, the escrow, which makes sure that the bullion is there for collateralization of the loan, to guarantee the loan. And the lender pays the funds on time. So essentially, the lender will deposit the money with us. He will make a contract, which starts on the 1st, the 8th, the 15th, or the 23rd of the month, and lends the money to our borrower. Now, the interest rate will be determined by the lender and borrower themselves. There are contracts in US dollars and Singapore dollars for a duration of 1 month, 6 months, 12 months, and 24 months. And a borrower might say, I have 100,000 US dollars worth of gold. I want to get a $50,000 loan. I'm willing to pay 3% for it. And he will just put a borrowing request on our bid and ask system. A lender might look at it and say, well, 3% is too low. I'm offering 50,000 at 4%. The borrower might say, well, I'm offering 3.5. The lender might agree, and then a contract is made for the next loan start date, which might be the 1st of the month, for 3.5%. So of the 3.5%, our fee is 0.5%, only when the interest is paid. And essentially, the system allows for borrowing and lending of funds without having a bank in between. And this has to be 200% worth of collateral, making it very safe. And of course, also that gold and silver is insured. So it's essentially a very safe lending system. And because it's so safe, the lenders are willing to take a relatively low interest rate of, say, 3.5% or so. The only downside of our system is that we're only lending money to basically rich people which have 200% worth of collateral, which means we have more lenders than borrowers. And as we are now moving more into crypto storage, we're looking into allowing Bitcoin to be used as collateral. Now, because of volatility, we might need to have more than 200% worth of collateral, and there are a few other adjustments that we might need to do. But I believe that will be a very appealing option for crypto holders if they can get a loan against the crypto. Because right now in the markets, there are not many solutions which allow you to do something like that.
Gregor, it's very interesting what you're saying there with crypto storage. This is the wild west of cryptocurrency. Many people, especially in the early days of Bitcoin, have lost millions and millions and hundreds of millions of dollars worth of Bitcoin that'll never be obtained. And this is an issue for people, especially people who don't understand computers very much and are scared of cryptocurrency. And look, everyone knows you're not supposed to keep your cryptocurrency on exchanges because of a potential shutdown and you don't have your crypto. But at the same time, if you go in and lose your private key at your house and, let's say you didn't back up your private key properly and your drive gets corrupted or whatever you might have, you're just as screwed. And this has been a real world problem for people. So let's talk a little bit about this crypto storage you guys are offering. And, how did this come around?
Okay. Well, maybe to start, I might just highlight that my background is software engineering. I used to be a senior data architect for Commerzbank, one of the big banks, German banks. So I'm sort of into this stuff. A lot of the software we work on, I actually developed myself. So when Bitcoin came around, I sort of looked at it and I tried to look at where are the weak spots when it comes to potentially losing the Bitcoins or having it stolen. And when it comes to cryptocurrencies, essentially you have to understand that there is something called a private key. Now, a private key is essentially like your banking password, token, two-factor authentication, and so on, everything rolled into one. It's one string of letters and numbers, and if you ever lose that, you lost all the Bitcoins in the corresponding address or account. So you have to be very careful not to lose that code. At the same token, if somebody steals it from you or gets access to it, then that person can transfer the Bitcoins out of that address and somewhere else. So in a sense, Bitcoin is very black and white. Whoever knows the private key basically controls the Bitcoins and is the owner of the Bitcoin. So over the years, so just a study came out basically saying that as much as 18% of all Bitcoins have probably been lost because people put their private key on their computer and then later they threw away their computer and then they figured out there was 4,000 Bitcoins on there, and that's $100 million that is gone forever now. There's also over 1 million Bitcoins that has been stolen. You hear about exchanges being hacked or similar type of issues, people putting their code inside USB sticks and the USB stick going bad and so on and so on. So essentially, you have to protect this private key. So when we looked at this problem, we basically said, well, we have a vault. And we have all these vaulting processes. We know how to keep physical things safe, such as gold. So what we ought to do is we take these private keys, we create a new private key, which is equivalent to creating a Bitcoin account, so to speak. We then encrypt it, and we use a laser to etch the encrypted private key on a polycarbonate plastic card. Now, the reason we put it on this plastic card is because it's very durable. You can keep this thing for 40, 50, 60, 80 years and it won't go bad. And we actually create 2 of these cards, and these cards then go into safe deposit boxes along with the gold. The customer gets the address where he can send the bitcoins to. So the customer can send bitcoins into this account whenever he wants, but he cannot take money out unless he contacts us and he asks for the account to be closed, in which case we'll be releasing all of the bitcoins. And what makes the system so safe is that this private key is not stored in digital form, meaning it's not on a computer. And because it's not on a computer, it cannot be hacked. And because the key is encrypted, there's no point in actually stealing the physical card, because if you steal the physical card, it's useless. You can't do anything because it's encrypted. So we also have a backup card. So if something gets stolen, we can just recreate the card which was stolen. In order to make use of these cards, you would need to have a decryptor. But even if you steal a decryptor and the card, it will still be useless because you have to go through a process with our vault management system to actually get a decryption key to decrypt the card. So to make a long story short, it's essentially a very safe system. And we have a 36-page white paper which sort of explains some of the fundamental inner workings of Bitcoin and how we secured it, and went into great detail of how the system works. We're also looking at probably open sourcing some of the code that we created for the system in order to create as much transparency as possible. And especially the technical people, I think they're very interested in this because there's a new type of crypto storage. We call it physical crypto storage because it highlights the fact that no data is stored on a computer, therefore making it hack-proof essentially. So that's the system that we are launching. And as I mentioned earlier, for people who transfer Bitcoin to these physical cards, they will then be able to use the peer-to-peer lending to get a loan against it. To some degree, yes, but you have to realize that I would say 99% of people are already doing that. You see, a lot of people might download a wallet, for example, from the internet. When you use a wallet and you receive Bitcoins, that wallet software is actually creating a private key and storing it inside the wallet. So, and it's creating a new one every time you have a transaction happening. So in a sense, you're already giving your private keys to the maker of the software of that wallet. And that wallet provider will then make a backup somewhere of that data. And oftentimes that data can be accessed, if you lose your wallet, with your email. So what that essentially means is that if you put, say, $5,000 in a wallet and somebody hacks your email, chances are they can recover that wallet and take those $5,000. Now, if it's $5,000, not a big deal. But what if it's $5 million? You know, would you want to store $5 million inside an online wallet? So some people who know Bitcoin very well, they might do what's called a paper wallet, meaning they just print out that code, they put in their own safe deposit box, and to some degree they do something similar to what we do. But they have to know what they're doing. And there are a lot of people out there, especially people who are new to this, who might not feel that confident on that they know how to protect this code or make sure that it's not being lost and so on. So what we essentially do, we come up with a way to ensure that there are backups, yet that now these backups are online. And when a customer wants to retrieve their data, we actually require a video conference. So we have 3 people that will actually identify the customer to make sure that it's indeed the customer. Because nowadays a lot of Bitcoins or other things get stolen via identity theft, where somebody just gets a hold of your email. And nowadays when somebody gets a hold of your email, you know, they know half of your life and they are able to log into a lot of systems. So essentially we looked at all of these sort of risk factors and created a way to securely store it. Now, on top of this, we are most likely going to be able to insure it as well. We're in talks right now with Lloyd's of London, and it looks like we might be able to get up to $1 billion worth of insurance on this crypto. So it's the question basically people have to ask, okay, do you want to spend, say, 0.5% per year to make sure that crypto is really well protected and taken care of? Or if you don't need insurance, say, 0.1% or 0.2%. And I have a feeling a lot of people, might say yes to that. And other people might say no, but what we really build is something to store large amounts of crypto safely over a long period of time.
Gregor, I think many people are going to have a hard time swallowing the fact that you're not actually holding your Bitcoin. You're sending it across the world. And for some people, that could be, thousands and thousands and tens of thousands, hundreds of thousands, maybe even millions of dollars, sending it across the world. And are you seeing any sort of pushback from people concerned about actually not holding their Bitcoin and sending it to a vault?
Well, since we are talking about the crypto, maybe I'll just add that, for people who would say, oh, I don't trust a third party storing the Bitcoin for me, what you can do is you can use multi-signatory accounts whereby you basically do a combined key, where you could keep your own key and you keep another key with us. And in order to access any of the Bitcoins, you need to have both keys. So we specifically designed our system that it is possible for customers to do their own multi-signatory security. And essentially means that, they don't have to trust us, and in some ways they don't have to fully trust themselves either, so that if their private key is lost, it's not so big, not lost, but stolen by somebody else, not as big a deal, because they would also need to get our private key. Of course, with cryptocurrencies, there's always this trade-off that you have to do. If you want reliability and ease of use, you just use one private key. If you want to have more security, use multiple private keys, but you just have to make sure that you don't lose the ones that you need to have. So I just thought I sort of bring this up. But no, overall, I think that, the role of gold and silver will continue in the future, because we have such an over-leveraged financial system. And I think that cryptocurrencies have a complementary role to gold and silver. And I think people will be going back and forth between gold and silver and crypto, to be honest, depending on what their risk appetite is.
Gregor Gregersen, everybody. Gregor, thanks for coming on Crush the Street and sharing your knowledge with us today. If people want to learn more about what you do, I suggest everyone to visit silverbullion.com.sg, and they can get information on bullion storage, crypto storage, peer-to-peer lending. It's all there, guys. Gregor, thanks for coming on Crush the Street with me today.
Yep, thank you very much for having me.